Hey everyone, welcome back to our weekly market update video featuring by Market Sol and Rationale. Before starting, please take a quick moment and hit that subscribe button to support us for more content like this. After covering a latest developments last week, especially the economic calendar, I'll just talk about their impact on prices. Then I'll quickly skip to the chart section to give you some potential trade ideas that are fitting into this current economic environment. Let's start quickly. First of all, here as you can see, economic calendar, we received on last Tuesday, we received CPI numbers and retail sales numbers alongside with the PPI. So first of all, on the CPI side, both headline and core monthly inflation came in better than the expectation, with more than half of the headline increases driven by the shelter cost. Within the core side, airfares like used car prices, all a declined month over month, supporting the view of disinflation progress is continuing. Another important indicator is super core inflation, which is pretty important for the Fed. It rose only 0.20% month over month and 2.7% year over year. Both all readings, all details plus core and the headline, pointing the steady disinflation. Overall, the CPI reports confirms this progress through only though maybe shelter size a bit sticky. So the market reaction tilted a bit on the dovish side for the Fed, as we saw the disinflation progress is on a good path. And US equities, for sure, all risk on instruments reacted positively to the CPI number. Then we received retail sales data, and the April numbers sales surprised to the upside, 0.1% versus 0% was the expectation. And the worst part was the March number was sharply revised up from 1.4% to 1.7%. That's the, I think, problematic part a bit. And I mean, since the sales part is good, the control group is the problematic part, which matters for GDP. That was weak because the April number came in minus 0.2% versus 0.3% was the expectation. This drags growth estimates. Looking across categories, autos and parts fell 0.1% after strong March. All electronics, department stores, all a slowed, contracted. Only online sales saw a small gain. So taking with tariff concerns, March and April data is it's, if you view together, because that's why I'm highlighting the revisions as well, because of if we're gonna see the impact of that tariff concerns on data, that's how we evaluate it. So when you skip to PPI numbers, the PPI dropped 0.5%, as you can see. The forecast was 0.2, and but the March we didn't see any revision. Core PPI came in stronger, 0.4%. The X trade core index came minus 0.1% versus the expectation was 0.3. So this paints a mixed, but still it's the PPI still supports the disinflationary picture. Last week, Walmart had an important comment on the potential impact of tariffs on prices. They're not reflecting the prices due to arising from tariffs to the prices yet, but the bearing to this getting tougher. That's what they said. I mean, at some point they will need to adjust the pricings, but this is the bad side for the inflation. But when you think that the retail sales number, especially when you check the control group, that demand is not that strong. So when such price increases arising from tariff increases is not if it doesn't get any support from demand, if it doesn't match with the demand, then the impact on inflation wouldn't be that much. That's the mentality. That's why I'm not that cautious on the inflation side still. And why this tariff concern is important, because we see the implication of that tariff expectation on the long end of the curve. When US 10-year yields, US 30-year yields are going up, and these are pretty important for economic activity as the companies are like getting that from like with the long term rates, plus all like a mortgage rates are determined according to those rates. That's why it has a huge impact on the economy, the 10-year yields and 30-year yields. That's why this potential tariff related inflation expectations, that's why it's pretty important. So if we wrap up like last week's price action with the CPI confirming the disinflation path, risk on pricing was standing out until weak retail sales data, especially control group data, received on Thursday. Also, growth indicator oil prices reflected perfectly the transition from risk on sentiment in the beginning of the week to the risk of sentiment at the end of the week. US indices responded positively no matter the data set, and the major driver at there is Trump tariff talks. We need to watch closely to see if tariff news keep being the major driver for indices, because at some point this tariff talks might lose its importance, and it might switch to, for example, Fed's path, rates path, or something else, maybe fiscal policy, maybe this credit agencies issue. That's what we need to be cautious on it. So because it has been the major catalyst on this huge decline in US indices, and now we see that it recovered after tariff talks. Because I don't know, that's the main picture right now. Apart from data flow, Moody's downgraded the US credit outlook on Friday, highlighting concerns over rapidly growing it has been, I don't know, $35-36 trillion debt pile. This for sure added pressure on fiscal policy, potentially complicated future tax cut efforts, because the mentality of this government was, okay, we're gonna cut taxes, okay, then we're gonna compensate these with the tariffs. So if tariff talks, I don't know how much money they can raise through tariffs. It seems like this debt pile is prone to grow, because how are you going to compensate such, I don't know, deficits without issuing more debt? When you issue more debt, that will be much more US treasuries will be on the market, and due to the supply demand dynamics, the prices of US treasuries will come down and the yields will go up. That's the major concern of the market with this growing debt pile. But with this credit rating issue, the sell-off in US treasuries would lead to increased USD supply, which is negative for USD. Considering this, for example, Japan being the biggest USD treasuries holder, their potential sell-off in US treasuries might lead to trigger a buying activity in Japanese yen. Because, for example, if Japanese investors sell US treasuries, sell USD, then what are they going to do? Their currencies also, their central bank is on hiking path, plus there's an uncertainty world. That's why there's a risk of sentiment is pretty, let's not say, at least it's there, we were not that far away from risk of issues. And we might see potential appreciation in Japanese yen as an implication of this latest developments. Apart from that, in the current environment, I would rather to be long in more as the uncertainty is relatively less on euro side, pound side, due to risk of sentiment and gold relation, Swiss franc, plus due to hiking path, Japanese yen. So in this four currencies, I would like to be more on long on these four currencies, and short against which currencies? Mainly on commodities related, like Canadian dollar, because I expect oil to come down due to the supply issues. I don't want to repeat myself. I've mentioned this a lot, that US needs lower oil prices in order to control inflation. That's why they're pushing OPEC Plus to adjust their supply. And with that mentality, also there was a huge descending triangle chart pattern technically that I had mentioned in my previous videos. So that's why I don't see any upside. I mean, I would rather to be either short in Canadian dollar or do nothing. Same applies for Aussie dollar and New Zealand dollar due to their relationship with China. China's economy still, it's pretty uncertain. So in such an environment, I would rather to be either short in CAD, Aussie dollar, New Zealand dollar, or do nothing. So according to this mindset, I'll show you some trade ideas quickly. Let me skip the chart section. First of all, let me start with pound New Zealand dollar. Here there's a huge monthly ascending triangle chart pattern. You can see breakout and like a bit like a resume. It's sorry, the movement paused a bit. And when you come to the like daily chart, as you can see, after this huge move, pullback, and here you can go to the 4-hour chart. This might be a good one to bet also. Here you can bet on a potential breakout of this rectangle chart pattern. As you can see, there was a few fake breakouts, but if you don't want to get caught on this fake breakout, you can also bet on this. As you can see, very little parallel channel here. You can try to be long, at least you can generate your first position around the lower boundary of this parallel channel to target the upper boundaries of this channel. That might be your first entry. Then if you see a strong breakout, you can add on this by betting on this like this monthly chart, this monthly ascending triangle chart pattern. It's a bullish reversal. If you want to bet on this in the short term also, you can use 4 hours. With same mentality, pound Canadian dollar. As you can see here in the 4-hour chart, you can call this head and shoulder continuation chart pattern. You can be, I mean, it's actually broken out, then pulled back, and now it's trading around here. You can be long around here with a stop here. That's a nice trade idea. Here, Euro New Zealand dollar. First, I would like to show you this in the weekly chart. There was a really nice rectangle chart pattern was broken out, pulled back a bit, and the price resumed and pulling back again. So as you can see, there's this kind of trend is going. I mean, it's not that parallel, but this trend that it's so obvious that there's an uptrend. So if you want to join this uptrend, this 4-hour chart, a rectangle chart is being formed here. A potential breakout activity might be used as a long opportunity. Canadian dollar, Japanese yen. I had mentioned this a lot. I think this here broken down, pulled back, and a double topish thing is being formed here. That's why this area for me, let's say this area is like a selling zone for me, and you can put your stop, I don't know, like around, let's say if you're short around here, you can put your stop around here in order to bet in this more higher time frame weekly chart, head and shoulder top. That might be a still good opportunity. Another futures market commodity futures market that I want to show, soybean oil. Here you can see this is daily chart, fake breakout, then it's breakout, pulled back, now it's resuming its uptrend. It's a good opportunity to be long around here with a stop around here. For example, this one, Canadian Japanese yen, all these trade ideas also are sent to you if you subscribe to Rationale newsletter service from the link below the video. I mean, you can get all these trade ideas directly to your inbox. In order to also, there's like a watch list section of the website that you can track all given trade ideas. If they're closed trades, if like the trade is still ongoing, you can just trace the current situation of given trade ideas. Let me show you this Ethereum Bitcoin chart pattern that I had shown in the previous video. because in the monthly chart, as you can see here, is like kind of a reversal point for Ethereum Bitcoin chart. That's why in the upcoming days, if this mentality, if this like a long bet holds on this side, we might see altcoins to outperform Bitcoin. With that mentality in your mind, here, this is Bitcoin weekly chart, okay? As you can see, Bitcoin always like converges to this trend line, squeeze, then break out, and does whatever it does really well. This huge upward momentum comes after consolidations. As you can see, that's why I'm waiting to see some convergence and consolidation to this trend line. So with that mentality, I expect to see some price. I mean, I wouldn't be surprised if Bitcoin comes again around like a 95K range with this mentality, because I want to see some more squeeze in this chart in order to see some much more powerful price action, right? I mean, yeah, this is Bitcoin. We never know that. It might, because we never know the momentum of this instrument, right? It's pretty powerful. But if we see such thing, technically it's much more healthy. So if we see some decline in prices, as you can see here in this Ethereum chart, in order to see the completion of this head and shoulder confirmation, we might see outperformance of Ethereum on Bitcoin, right? And for example, just to support this idea, when you go to Solana, you also see a cup with handle chart pattern formation is being formed here, right? Here, as you can see. So while this price goes like this, we might see at the same time Bitcoin to do this price movement. That might happen. That's my expectation. We'll see. And let me just quickly skip to I just want to talk about two equities. Here, as you can see, Alibaba group, like Baba, ascending triangle chart pattern formed here in the weekly scale. Pullback, fake breakout, then now like pulling back and seeing some rejection from this 119 or 120 levels. So you can, it's a good level to be long around here. I think in order to, if you want to add this to your portfolio as a potential bet that China is going to come back, that might be a good option, because as we see more positive price news from tariff talks between US and China, we might see some good price movements on trade like equities like Baba, or there was one I just forget the name, JDT, I guess. Anyways, so, and lastly, I want to talk about this Google chart. Here is just to like show you the price action of Google, the latest price action, head and shoulder continuation chart pattern, okay? Or I don't know, you can call it also cup with handle, doesn't matter. And nice breakout, pulled back, saw some rejection from this prior resistance, and currently it's a support level, and resumed. And here the it was just like here in after the earnings we saw like a huge volatility, but then again the price saw some rejection from this level, and considering this 150 USD levels seems to be a nice support area. If you just want to add your portfolio, because some people that rather than trading, they're just adding like companies like Google, Amazon, like Magnificent Seven companies to their portfolio. I'm just showing this, just it might be a good opportunity to add some Google into your portfolio. So that's all I'm gonna talk about this week. I hope the trade ideas you find here are useful for you, or at least it gives you some insight that how you can shape your thoughts while you're trading. If you have any question, please just write comments below the video. And if you find like valuable whatever you see in this video, please like button. Please also subscribe to MarketSol YouTube channel. Also, in order to get all these kind of trade ideas in a written format, also like alongside with the watch list, ongoing watch list, you can subscribe to Rationale newsletter service from the link below the video. Thank you for your time. I wish you a really nice week.